CBS News senior business analyst Jill Schlesinger joins us now for more about the surging rate of inflation and the rest of the nation's economic picture. Jill, good morning to you. First question, where did we see the biggest rise when you look at inflation as a whole?
Well, let's start with the places that we encounter most frequently. Look at energy. Energy costs up over 33% from a year ago. And of that energy component, gas prices are just soaring, up nearly 60% from a year ago. That's the largest annual increase since the spring of 1980. Then you go on to the grocery store. You're driving to the grocery store, and as you saw in that piece, everything costing more. Food costs up 6.1%. And again, it's those proteins that are really driving a lot of the rise in food costs. Those costs are not going away anytime soon. One little glimmer of good news was that services, which usually comprise about 60% of consumer spending, those costs are rising, but not nearly as quickly as all those commodity prices.
Jill, you mentioned those gas prices and and looking back to 1980. How is this different, though, than that raise in inflation that we saw in the late 70s and early 80s?
Well, it's very different because in that time we had very slow economic growth. And right now we've got robust economic growth. Part of the reason why this is such an interesting time is that, we've been sort of a little bit on pins and needles waiting for things to actually get open and grow. Now they're open and people are going out and going crazy. So the reality is that right now this inflation, it's not going away anytime soon. But it is important to know that companies, especially the profitable ones, they are starting to pay their employees more, so that should help.
Jill, let me ask you about that timeline. The president says he believes inflation has peaked. Do you believe that?
Well, I don't think it has peaked yet, and I think that this is a Econ 101 lesson in spades. When you have constrained supply, and we do have that, a lot of supply shortages, and surging demand, we have been waiting for almost 2 years to spend some of the more than $2 trillion that we have amassed as Americans. That combination is explosive. It's why we're seeing such high levels of inflation. It's likely to recede over the next year, but you know what? We could reset at a higher inflation rate than we were before the pandemic. Before the pandemic, 2019, 1.8% was the CPI. What we're probably looking at a year from now, 2.5%, maybe 3%. And that's something Americans are going to have to get used to.
Next week, Jill, the Federal Reserve will hold its last meeting of the year. What should we expect, and why should people be paying attention to this?
Well, the Federal Reserve, led by Jerome Powell, is going to change its monetary policy, and this is very important. Before his congressional testimony, Jerome Powell had originally said, inflation is transitory, it's temporary. Now they've shifted. During that congressional testimony, Powell said that the Fed is going to stop buying all the bonds it was doing as an emergency measure, and that will pave the way for an increase in short-term interest rates. All of this could happen sooner than previously expected. The Fed will lay out its plans next week. And listen, gang, I know you sort of have your eyes glazed over when we talk about the Federal Reserve, but this impacts everything from your savings rates to your credit card interest charges to maybe being able to borrow money for a small business. So I promise I'll cover it for you so you don't have to pay attention, but it's really important.
You are always covering it, Jill, and for that we do appreciate it. Thank you.